Euro dollar. So the euro is confined to some consolidation in the early week, with the market consolidating after the following the breakdown in the previous week, the significant breakdown below the July base at 108.09. This now sets the stage for the market to consolidate and head lower eventually back towards the multi-year low from March at 104.62. At this point, any rally should be very well capped into the 110 area, while ultimately only back above 113 would compromise the immediate bearish outlook. Sterling dollar. So cable continues to put in a series of lower tops since posting 2015 high all the way back in June at 59.30, and the most recent lower tops looks to be in place around 155.10 ahead of this, what is this latest breakdown back down towards the 150 area. With the latest breakdown, the market is now focused on a potential retest over the coming weeks down towards the 2015 low at 145.66. And in the interim, any rallies that we see here should be very well capped ahead of the 153 area. Dollar yen. So dollar yen has rallied all the way up, breaking above key August peak at 121.75, trading up to the mid 123s thus far, ahead of the latest minor setbacks. At this point, the market has stalled out around the 78.6 fib retracements off of the 2015 high down to the August low, and the market will be required to establish a close above that 78.6 fib retracement in the 123.70 area to open the door for a full retracement, potentially back towards that 125.85 peak, and a more significant bullish resumption. Inability to establish above the 123.70 area will keep the pressure potentially, or put the pressure back on the downside for renewed weakness. Euro Swiss. So Euro Swiss has been trading towards the lower end of the range, though while the market holds above 107.14, the multi-week range low, the overall structure continues to favor a recovery, with the market seen higher eventually back above 110.50 and towards 112 further up. Aussie dollar. So Aussie is looking like it wants to trade back down towards a retest of the recent multi-year low just above 69, and any rally should be very well capped now into the 72 area. Ultimately, the market remains confined to a broader downtrend, and only back above 73.82 would compromise the immediate bearish outlook. Dollar CAD. So dollar CAD has been pushing higher over the past several days, and the market is now focused on a retest of the 11-year peak from September at 134.57. Look for any setbacks to be very well supported into the 130 area, while only back below 128 would compromise the bullish outlook. Kiwi dollar. So Kiwi has rolled back over in recent trade, with the market now looking to put in a medium-term lower top in the 69 area, which will be confirmed on a breakback below those recent multi-year lows in the 62 area. SPX 500. So the S&P 500 is showing signs of wanting to roll over following the latest break below some key short-term support at 2070. Look for a close below the low that we saw on Monday, which came in at 2067, to confirm and further accelerate declines, taking the pressure off the top side and a potential retest of the record high from May at 2137. But a break back above the recent highs that we saw at 2117 would open the door for a full retracement and push above that record high at 2137. Gold. So gold has pulled back sharply over the past couple of weeks, with the market now trading back down just shy of those multi-year lows that we saw, going back to the August lows that we saw, July lows around 1077. And the market now has to decide whether it wants to breach those lows and trade down towards 1000, or find some support in here and head back higher towards recent highs that we saw up around 1192. At this point, it's a bit of a wait and see with the gold market, but a break back above 1120 would do a good job of taking the pressure off the downside. That's all for now.